Hey guys, we're kicking off a new month in the markets. Welcome to February trading. January was an absolute incredible breakout month. We broke above that bear barrier wall of 2022, but even more important, we had some massive technical barriers that were broken. One of them was the 200-day moving average. It is absolutely understood, guys, that when a stock or a market falls below the 200-day moving average, the bears have control of it. It was below the 200-day moving average most of 2022. But when it breaks back above the 200-day moving average, that's when the bulls have it, and that's what we've seen. The bulls have been running. They ran the entire month of January. We got that break and that close above that 4,100 threshold, which we talked about. It was such a barrier before. The S&P closed up the month 6.2%. And then we got even something more interesting, which was a golden cross. This is when the 50-day moving average crosses back above the 200-day moving average. Now that typically signals the beginning of a new longer-term bull run. That's if it sticks. We got to be watching that very carefully. So the question is, has the market pivoted from bearish to bullish? Is it time to be loading up? Did you miss the bottom? I'm going to be covering that today. I'm going to be talking to you guys about what I see in the charts. I'm going to look at both sides of the story. Thanks for tuning into the Stocks with Josh show. You can see I'm in a hotel. I'm going to be traveling for the next couple weeks. I'm not on vacation. I'm working, but I'm going to stay connected to you guys. We are a community of investors and swing traders. I track these markets every day. I share with you guys what I see and what I think is going to happen next. I teach technical analysis, and we swing trade some fast-moving stocks. As always, thanks for hitting the like. If you want that, then hit the subscribe and the all YouTube notifications bell. Don't fall for scammers. They pretend to be me in the comments. Keep your money to yourself. Check the top pinned comment for an offer from the Moomoo investment app. These guys are offering 15 free stock for opening and funding an account. You can screenshot the offer to get the exact details. I use Moomoo personally every single day for their free level 2 data, their stock screener for finding hot stocks. I love their news coverage, and I like their 8 smart order types that enables me to lock in profits and protect my capital. Get serious about your trade tools. Click the link, start investing, and then you can come find the chat group that I host on the app. We call that the Stock Josh fam. In my view, it's absolute fire. I've been fortunate to build a group of very caring people that actually answer questions that are posted there every single day, all throughout the day. They do that alongside myself. I love the group. Salute to the soldiers of the chat. So here's what we got going on. Despite all of the bad news that we saw in the markets this last week with the Fed and earnings, the bulls were in charge and they ran the show all week long. Now I'm going to go over what these markets are doing and what to watch out for from both, like I said, the bullish and the bearish story. If you're really serious about making money, you can't be headstrong. We're not here to be right. We're not here to outsmart the markets. We're here to make money. From the bullish narrative, whenever we have a big month up in January after a down year, which is what we had, the market historically gives us back a positive return for that next year. Now, I want you guys to check out this chart by Carson Analysts. We see that in 2019, for example, after the 2018 correction, in January of 2019, the markets were up a staggering 7.9%. They've been down the year 6% roughly. But 2019, the year ended up 29%. As that chart shows that this pattern has been repeated in previous years as well, 1975, 67, 61, and 54. Interestingly, though, the market is still hedged to the short side by institutional money. Now, here's another chart that I want you guys to check out. The descending blue line represents how investors are positioned. It shows that the majority of investors actually had their risk. They were positioned for the markets to go down. They were positioned for the markets to go short in the month of January. And yet you can see that the red line reflects that the S&P 500 20-day moving average return was way higher. That the majority of the market participants did not actually profit big from this move up in the month of January because they were hedged to the short side. So what that means is if the market continues to go up, these guys may be forced to close their short positions and join the running bulls. Of course, this would drive the markets up even higher. And so do not think that we have a clear direction just yet. However, the opposite could also be true. This chart does show that the smart money doesn't believe this rally will last. And they could be right. But no matter what this means is there's going to be plenty of choppy days ahead as the market attempts to prove who ultimately is right. Now, I'd love to hear from you guys in the comment section. Throw a heart in there, say hi, and let me know if you guys are bullish or you're bearish for the month of February. Now, let's look at another bullish dynamic that needs to be examined, and that's how money supply has recently changed in the global economy. I've not been hearing a lot of people talk about this, but you guys know that this market going down for 2022 was about a constriction in money supply. All of it driven by monetary tightening, driven by the US Fed and other financial institutions pulling back. However, in recent days, there's been easing coming out of two economic powerhouses, the People's Bank of China and the Bank of Japan. These guys have been printing money, and they've actually been doing monetary easing, something that China had never done before. They've released billions back into the system, and so this is partly why the markets ran in the month of January. The US is still tightening, but these banks, they're now easing. Going to absolutely have a big impact on US companies and their performance in the next quarter. Now, we've already seen that there's a lot of Chinese stocks that have been on a heater. These companies have been bouncing hard off their recent lows. Many of them were up 100% just in the last couple months. Now, let's quickly talk about the current political tensions between the US and China over this weather/spy balloon that was flying around where it shouldn't have been, and it got itself shot down. Now, we are likely to see Chinese stocks take a hit on Monday, and I'm personally going to view it as a buying opportunity. Chinese stocks are always faced with really bad news. They sell off and then they bounce back because the Chinese economy is moving forward and the global economy is moving forward. So what I'm going to be watching out for with my favorite Chinese stocks is for a quick scalp. But that doesn't mean that you should buy them. I'm not recommending that you buy, sell, or hold anything. I'm letting you know what I'm looking for on Monday morning. For me, I understand that fear in selling or FOMO produces money-making moments. And in my view, that's what we've got here. So I'm going to be watching a couple companies very closely. You guys know that 4 of my favorite Chinese stocks right now are Tall Education, Alibaba, T-Com, and Baidu. And I'm going to do a video about those stocks tomorrow. I'm going to give you guys some fresh technicals on them going into this week. I want you guys to check and make sure that you are subscribed so you do not miss out on those. I think that's going to be super good. So the big question is, people are going to ask me, Josh, are you feeling bullish or are you feeling bearish right now? What do you think is going to happen? Well, like I said, I'm looking at both sides of the story. Let's look at some of the warning signals that the market gave us just here this last week. In the last 2 days of the trade week, there was a crack forming in that bullish story. A couple important things to look at technically. The SPY and the QQQ, they both printed a sell signal on Thursday, and then it gave us a bearish inverted hammer on Friday. Now I'm going to cover that very carefully for you guys. Let's quickly take a look at the Bollinger Bands. The markets gave us this significant deviation from the mean when we broke out above the top layer of the band. And what that means is that it wants to move back to the middle of the band. The simple observation is that when a stock or the markets move outside the band, it has a much lower statistical likelihood that it would continue to go higher, which means that a lot of people are going to begin to look at that as a selling opportunity to close their positions and take profit, wait for the stock or the index that they're trading to come back to fair value, which would be the middle of the band, which is the average price. This, simply understood, is that the move Thursday was irrational buying, and it's likely going to signal selling for many smart money. And then, of course, that led us to the next bearish indicator, which was the candle that we got on the following day, which was a bearish inverted hammer. So what exactly is that? Well, a bearish inverted hammer is a candle with a very small body, but a long upside wick. An inverted hammer tells traders that sellers are putting pressure on the market or the stock. It warns that there could be a price reversal following the bullish trend, that recent bullish trend. We also see that the NASDAQ is in overbought territory, and it ended the week with this big wick candle, which is also very bearish. So from a TA perspective, right now, these indicators are largely bearish. We've got some of this tension news going into Monday, but we cannot just think that we shouldn't take profits on any of the short positions that we're in on Monday, because these market makers, they've got the bears in the trap and they've been skinning them alive. These markets could turn right around after a dip on Monday and they could jump. So I'm going to keep it very simple for what I'm looking for to be a buyer to load up. I need to see the markets close back above 4,200 with volume. That's going to tell me the market wants to go higher, but I'm going to be looking to sell if the market breaks below 4,100. In my view, that's the trade range that we're going to be keeping our eye out for. This video, I think it was packed with rich content. Go ahead and hit that like, subscribe, and that YouTube notification bell to keep getting this straightforward research. Don't miss tomorrow's video on hot stocks to watch out for this week. Buy signals, in my view, are going to be firing on Monday morning. I'm going to be watching it very carefully, and I'm going to share what I see with you guys. As always, we'll do it together, my friends. Peace and blessings. See you in the next video.